Let's multiply that by 100. Unfortunately, for the week, we did lose negative 12.10%. So our ROI was pretty bad this week. I hope things will turn around next week a little bit. I may have to lessen my exposure a little bit on my swing, and that's my content this week. Hey, how's it going? It's Rocky. It's week 25 in the year 2023, and I'm switching it up a little bit. What I have up here is the past 5 years for the Dow Jones Industrial Average, where each candlestick is equal to 1 day. And basically, you could see this big dip that occurred here in 2020. That was due to the pandemic and the closures that occurred. You can see the Dow Jones dipping from about 29,000 to all the way to 18,000, and of course that reversed a lot due to the liquidity that was pressed or entered into the market, and now we are paying for it in the inflation. Now, a quick little summary there, and the reason I bring this up is I drew two lines that has been a focus for me. This first line that I drew right here was essentially I wanted to draw where the peak was before the pandemic. And then another line that I drew is more of like, it became more of a resistance really. I was trying to figure out if this line was more of a support or a resistance, but to me it's really looking more like a resistance, but we'll see what actually occurs with that. And now I'm gonna zoom in to what we're trading recently. So the one that I wanted to point out was right here. When we transitioned from a June contract to a September contract, a bit of a jump occurred here. To me, I didn't think much of it. I knew that it was a bit much, and that's why I had this bias on how I was going to trade. And I'm going to switch this chart up to the 1 hour just to show you exactly what I mean by that. And what I'm showing here is essentially the past 2 weeks. And what I was showing earlier with the big jump occurred right here on Thursday of last week. This was the day after FOMC. It jumped a whole lot. And because of that, I ended up shorting. So I'll draw the lines. I'll bring my lines here just to see that a lot cleaner. You can see on Thursday that I shorted 6 contracts. And of course, because of that, I was underwater on Friday, hence why I was negative last week. And then, but my thesis was it's moving up way too quickly from what Jerome Powell was saying at FOMC. So I knew I wanted to short this. It's just that my main thesis was I was going to wait until Tuesday when the market opened before I covered. But I wanted to play it safe, and you can see here I covered 6 contracts at 33,480. And of course my thesis is still there that it should keep going down. So you can see additional shorts that I've done here. 5 contracts ended up covering at 34,387, and then another one here, 8 contracts, and I covered at 34,250, and another one with 4 contracts covered at 34,204. And then today, Friday, we actually fell below 34,000. Fell below that line that I've been watching since 2020, which is the 34,063.64 line. And now I'm a little bit concerned, to be honest. Why am I showing this? I'm showing you that on my intraday I'm doing quite well on the shorts. This week I had no losers on the shorts whatsoever. However, my worry is my swing. So I am swinging, and what I was doing is on this trend down, I was adding more contracts, and I basically added a little too much, and I might be having a margin call on Monday, so we'll see how that actually turns out for a week next week. So we'll go through the account statement this week. I'm recording this on Friday, June 23rd. It's 9:47 p.m. in the Pacific Coast. And what I'm showing on the statement started from this past Sunday, June 18th to today, Friday, June 23rd. And looking at this description here, I want to point out that I had to withdraw $2,000 from the account because this is now my main hustle, right? So I need to be able to withdraw every week to pay the bills, and that adds an extra pressure that for a while I wasn't feeling it, but now I'm starting to feel it. So we'll see how the next few weeks goes. And just looking down, I didn't withdraw anything else, but the mark-to-markets were pretty significant here. You see a mark-to-market loss here, $3,235.50. Another mark-to-market loss here, a little over $2,000. And then another one here, just at $500, but Friday, that was kind of big, close to $5,000 on what we had a mark-to-market loss there. So I'll bring the calculators just to see exactly how we did for the week. We ended at $35,645.10. However, as I mentioned, I did withdraw $2,000, so we'll add that to our ending cash. So our actual ending cash was actually $37,645.10. Now we'll subtract what our starting cash was, which was $42,827.70. And this week, unfortunately, for 2 weeks in a row, this is the second week that we are in the red. We gave up negative $5,182.60 just hourly. In 40 hours in the US, that's about losing $129.57 every hour. All right, so now let's calculate our ROI in percentage. So we lost negative $5,182.60, and we'll divide that by what our starting cash was, which was $42,827.70. Let's multiply that by 100. Unfortunately, for the week, we did lose negative 12.10%. So our ROI was pretty bad this week. I hope things will turn around next week a little bit. I may have to lessen my exposure a little bit on my swing, and that's my content this week. Bit down, I'm a little worried, but hopefully we can get out of this funk and start making money again next week. Thank you for checking out my content. If you have any questions or anything, please drop me a comment below, and if you haven't already, please subscribe. Your subscriptions really do help me, as YouTube itself is also a source of income for me. All right, y'all have a good one, and I'll see you on the next one.